Hey, good morning, everybody. So, we've got some jobs numbers coming out this morning. We've got consumer sentiment coming out tomorrow. And understand next week we have the all important CPI. The reason I'm bringing that up at the beginning of the live stream is you've got a gentleman, Carl Icahn, who, let me just see what he did. Oh, I have so much information. Carl Icahn is betting on a high CPI coming in hot, which is going to be released February 14th, which is Valentine's Day. He bought a $5 billion position in SPX puts, 40/50 strike that expires on February 17th. So understand his option expires next Friday. He believes the SPY is going under 405 and probably a couple of points under 405 because a $5 billion position is kind of large even for someone like Carl Icahn. All right, what other news we have going on? Well, if you're part of our Discord, it should be a link below. The public trade today is Amazon. Calls above $100.62. It's your entry. Puts when Amazon stays below 99.86. So watch the entry. Use the potential price targets. Again, it's all on our free public Discord. What else is going on? Oh, profit taking. Insiders have been selling. So I'll name one company, BlackRock, right? Guy sold $2.5 million worth last week. Head of multi-asset strategies, $3.7 million. First time these insiders were selling since August. Well, that's not new. Insiders are selling all around. Yes, they need money to live. So if people say insiders selling, that's a bad thing. Sometimes it is, sometimes it isn't. Obviously, these people need money to live. A lot of their income is tied up into their stock holdings and their business holdings. With that said, when you have a multitude of insiders selling across a full industry, like let's say oil or energy or even big tech, yeah, that would be some concern for me. Again, we are a little frothy in the market. What else? Oh, interesting. Google, which got hammered because their chat GPT bot answered the wrong question. The stock lost 7%. Now people say, is that just it? It answers the wrong question. Stock went down 7%. It just makes them look foolish. People were jumping on the bandwagon thinking that it's going down. And then Microsoft basically challenged Google. I'm going to give you the Microsoft story and how they challenged Google in a minute. But Google surpassed 1 million contracts yesterday. 61% of them were calls. So understand the buy the dip mentality is still there. And I took advantage of the buy the dip mentality yesterday. When the SPY was going down to $410.50, which I knew was a major dark pool level, I expected it to bounce. So I took my first call entries with them expiring yesterday, $410 calls. I think I paid $1.37 each. I got as low as $1.34 each. It went down to $1.26. So again, strategy was the SPY will bounce off 410.50. I was a little wrong. It went down to 410.20, so I was off by 30 cents, but I had damn good entry. My strategy was we're going back to VWAP, and we're going to touch 412, maybe 412.50, and I'll get at least $2.50 for my contracts, the same contracts I was in for $1.35. That's a complete strategy. Now, execution. The SPY did not go all the way back to 412.50, but when it went above and I got $2.15 per contract, I got the hell out. Why? I just made $80 per contract. I was in for 15 contracts. I made about $1,200. That is a day trading. I don't need to chase the market at 9:30 a.m. I don't need to chase it at 3 p.m. to make money. I'm looking for an A-plus entry. I'm looking for where I can find support. So I'll talk about the SPY levels for today because there were some dark pool levels. And the fact that we're sitting pre-market up at, let's just see where the SPY is, 413, I was going to guess. We're at 414. Understand, I will get to the levels of the SPY. So please, it's very interesting because we're at a higher point than we were at most of yesterday. So if you take all of yesterday's trading, 99% of the time, we're currently at a higher point than we were yesterday. So did the market dynamics change that much? Not yet. Okay, so I will get to the SPY. What happened right before it closed? A variety of calls hitting the tape for Microsoft. So I mentioned this new battle between Microsoft and Google and how they're using AI. Let me just see if I can get it out here. I thought I had it, man. Geez, if I don't have it, that's so disappointing. I've got a firm earnings. We could talk about that. Okay, we could talk about bullish or bearish flows yesterday. SPY contracts 50-50. Tesla, there's still 65 to 35 in favor of calls on Tesla. Q's about even, 49 to 51. Google, which I mentioned, 61% were calls. Microsoft, all the calls hit the tape right before 4 o'clock. 64% calls. Apple, 57. Amazon, 61. NVIDIA, 58. Why is it important? Because these are all the industry leaders. So the fact that you almost have a 6-to-4 ratio on these, yeah, I would think things would go up. All right, let's talk about a firm which is down, 17% pre-market. I thought it would actually be down more than that. Now, I spoke about Blink. I spoke about their offering. I spoke about earnings for other stocks and how I expected the stock to go down. Remember, I sold my Intel puts yesterday at $28.20. Well, I was in $1.40 higher. So yeah, I secured about 77% profit. That trade took me 3 days. I felt like diamond hands holding Intel for 3 days. It was crazy. But let's talk about a firm, okay? Buy now, pay later. I told you months ago people weren't paying. I told you that people are signing up for this buy now, pay later, and they're just not paying. The same way credit card debt's going up. So the company, which was supposed to have revenue of $416 million, they missed. They had $400 million in revenue. Okay, so they slight miss. However, their expenses for the company were $780 million. Okay, so they lost a shit ton of money. I expected the stock to go down 30%. It's only down 17%. So here's the catch, and I'll bring up the Affirm numbers one more time. Affirm sitting pre-market at down 15%. Oh, it looks like it's going to rebound, right? That's what we're seeing. So it's down 15% pre-market, 15.42. Let me tell you, the company still has a book valuation of $4.65 billion. So here's the thing. They're valued at about 11 and a half times their sales, okay? That's a valuation that's a little too high, especially when they reported expenses of $760 million and probably a loss of, I don't even know. I don't even know how many shares they have outstanding. But to me, there is more downside. So if the market wants to pop this morning, this is a trading idea. If the market wants to pop this morning, then I'm going to look for a rejection on the SPY. Maybe we see it around 415. Maybe we see it at 416, right at the same level we rejected the other day. And I'm going to look for a firm to reject as well. Now, we know after there's a crater and the stock goes down by 15, 17, 20%, they like to buy up the dip because they think it's going back to that same previous level. Affirm, no. So it might take a full day. It might take 2 days. I might enter this one like right before close of business today, or maybe tomorrow's open or something like that if Affirm shoots up. But I want to short Affirm. I want to get puts. I want to go out a few weeks. Why? Because the valuation of Affirm at $4.5 billion could easily be $3 billion. And if it's $3 billion, then you're talking about Affirm at $9 a share. Now, even though I made money on Carvana going up, remember when Carvana was $29, $32, and I was like, the valuation is $15 billion. Who's to say this company is not worth $3 billion or $4 billion? Not me. What happened? Carvana went down. I still got involved with the shorts on the way up. Same with AMC earlier in the week. I think it was Monday. I told you the cost to borrow against AMC shares was 412%. Freaking high. So what did I do? I got into AMC calls this week, early in the week. I banked on the first day. That was it. So Intel puts, AMC calls. I've played the SPY both ways, been correct. I'm not crushing it this week, but I'm having a consistent return of $800 to $1,000 to $1,200 day after day, and less stress because I'm waiting for a perfect entry. I'm waiting for an A+ entry. If you like to trade early, it's great to watch Romeo on our Discord do his live stream at 9:15 because he's telling you, and he's using the candlesticks and he's using his orb theory, and he's telling you secure profit. I think Exxon was one of his plays yesterday. He crushed it. Okay, so that's Affirm. I still think Affirm could go lower. We will talk about SPY and dark pool levels. I mentioned the free pick or on our public chat, which is the Amazon calls or puts, 162 versus 99.86 is an entry. Insider selling, I mentioned that. Google, Microsoft, I mentioned that. Okay, so Affirm, right? Here we go. Revenue, $400 million. Expenses, $760 million. Terrible guidance. Staff cuts of 19%, okay? Even the merchant numbers are dropping. Buy now, never get paid. That's kind of what it sounds like. I mentioned Carl Icahn, big bet against CPI, thinking CPI is going to come in hot, understanding that pricing on food and energy has increased a little. So Icahn might not be wrong. Imagine if We run until next Wednesday, so we're a little choppy. We hit that 420 number, let's say Monday or Tuesday, right? And then Wednesday's CPI number comes in hot by 1/10 or 0.2%. You're going to drop 3 points. So we're going to talk about going up on the SPY all the way to 419 or 420, and then possibly drop right back to that 408, 407 level. Yeah, that's one of the dark pool levels. Remember 407. So let's get right into it. Let's pull up the SPY. I can give you my SPY prediction today. Yesterday, around like, what was it, noon, 12:30, I thought the SPY was going to finish right at 411.09. It finished at 410.65. Let's remember, it looked like it was going to rebound. So again, I wasn't buying it. I wasn't believing it. We'll go back to earnings last week, but let's bring up the SPY right now. Let's bring up Discord, and we'll look at the dark pool levels together. So let's see where we can reject DP levels. SPY, here we go. I already know what the levels are going to be around. So again, you could see the level increasing, okay? Yesterday, let's remember that 410.50 level, which I mentioned, which is why I got into my position of calls yesterday, was down here. We were in 8 billion range. The 407 was an 8 billion range, 413. These were all lighter. Now they're coming in a little heavier. What is that telling me? It's telling me we're going to see smaller increments of movements. In the past, when the dark pool levels were really small, we would see a jump from like 411 to like 415. You'd be like, holy shit, the SPY just blew through the roof. Today, we're not going to see that. With larger dark pool levels at smaller increments, what we're going to see is more choppiness. All right, so that's my guidance to everybody today. You're going to see choppiness. So when your option position spikes, okay, whether it's calls or puts, I want you to exit. When it drops back down, let's say you're in it, your options are worth $2. As soon as they spike up to 280 and you take that 40%, boom, sell, take the 40%. Wait for it to drop back down. If you like that same position and you give yourself enough days to be correct, not just saying tomorrow. Tomorrow is more of a lottery. If you're in on Thursday and you're out on Friday, you've got one day to be correct. You best be correct. Okay. So that's the theory. Get out, take profit, get back in. Yeah, that was great. Okay. So let's go back to the SPY right now so we can talk about the levels. Again, right now the SPY is sitting, 414 flat pre-market. Why is that important? Because if we look at the dark pool levels, let's do it together. You're looking at 413.63 is a small dark pool level. So if the market wants to start out strong this morning, okay, I'm going to look for the market to be bought up at open. We might see a little dip and then a buying. And I'm talking about within the first 20, 25 minutes. And where could we possibly reject? Well, the top level here, $17 billion worth of dark pool, 416.73. So I always tell you guys, plus or minus 20 or 30 cents. So an easy reminder would say, okay, I'm looking at 416.5 to 417 as a rejection level. If the market wants to get bought up, it might break that level and then come right back down. But again, that's the level I'd be looking to get into puts. Now, if I was going to look to get into calls today, the fact that we closed at 410.65, which is right above a dark pool level, and then I go, okay, 404 is not happening, 401 is not really happening. Maybe after we see CPI, here's the level, 410.52. So I'll say to myself, history repeats itself. Yesterday, I got in right around 410.50. Then we dropped to 410.30, and I thought, okay, I'm going to add a couple more. And yesterday, I've never been so sure about a trade. Now, there are times where I don't know if I want to be in this. I might win. I might lose. I thought I had a good strategy. Yesterday, all I did is want to buy up the same option over and over and over again because I was like, there is definitely support. I find the support. So you won't be that clear every day. But yesterday, it was like crystal clear for me. So when you have those moments where you're like, I see the support or I see the resistance, I know the stock or ETF is going down from here or up, that's when you increase the number of contracts you have. I literally yesterday wanted to add a 0 onto my purchase. And instead of 14 contracts, I wanted to be at 140 contracts. That's how sure I was yesterday. However, I've taught myself through mistakes in the past, you never want to put yourself at risk. I mean, there's no complete certainty. You know, people ask me about the Super Bowl. Who's going to win the Super Bowl? I'll tell them Kansas City Chiefs are going to win the Super Bowl, but I wouldn't touch a dollar on it. I wouldn't make one wager on it. Why? Because I'd rather wager on myself. I'd rather wager on my investing skills to make money rather than football players' skills to not fumble or make a shoestring catch or not, or how the ref calls it. Do they make it by an inch or not an inch? So yeah, it's fun to wager. It gives you some excitement. But when it comes down to actually making a solid bet on your future for finances, it's not coming from the football game or a basketball game or the Super Bowl, whatever it is. It's going to come from you putting the time and effort in. We had Romeo teach a lesson on Discord last night that was joined, and you could watch all of his replays. He's teaching people how to properly trade. Okay, let's get past that. Let's go to some questions today. So what do I see happening with SPY? Okay, so let's just go back. History tends to repeat itself. So let's see what the SPY's range was yesterday. SPY range yesterday, we were a 4.5 point range, 410 basically at a 414.53. So 4.5 point range. I will say to myself, 4.5 point range, little over 1%. If we see something similar today, and we're going to open right at the 414 area, if I think we're going to possibly reject at a high, this is your bull case scenario, 417, and I go down 4.5 points from 417, that puts me at 412.50. So if I'm looking to get bullish in the market and looking for support, I'm going to look to see if there's support right around the 412.50, knowing that 417 is a possibility. Okay, there's your bull case scenario. Yes, we're opening at 414. That means whatever stocks are up 2% now, if we're at 414 and we're headed to 417, they're probably going to be up 4.5% at some point today. So if you're looking for that quick morning dip right out of the gate, there's a trading strategy. Now I'll give you the bear case scenario. The bear case scenario is we rejected $415 earlier in the week on the SPY. We rejected it yesterday. I think the high was 414, like 53. We're sitting right at yesterday's close to high pre-market. Okay. And yes, there were certain earnings. I'm going to talk about those in a minute. But here's the theory. Nothing's really changed. The Fed's still going to be as aggressive. Rates haven't changed. 2-year, 10-year still going up. US dollar still going up. So what's going to happen? We could reject right at the 415 level, right where we rejected yesterday. So we dip, we spike out of the morning. We hit 415.28. We hit 415.40 on the SPY, and then we drop. And then we drop again. Something like that. So if our high is going to be 415, I'm going to say the low is going to be 409.50, right under the 410 mark, again, plus or minus 20 cents. What does that tell me? Well, that's telling me we're going to mirror yesterday's market pattern. The low was just under 410, 409 and change. The high was 414.73. So you just move it up slightly, but you're going to trade the same range, which tells you at the top end, you could play puts. At the bottom end, you can play calls. Did I think yesterday I was going to get into calls? Hell no. I've been bearish on this market. I've been liking to wait for the spikes, and I've been buying puts on the spikes and then selling on the dips. Remember 2 days ago in the morning, I said I'd be looking to get in puts at 412, 412.50. It went up to 415. I said I was looking for the drop to 407. Where did it drop? 407 and change. So my entry was off, but my strategy was correct. Because my entry was off, I took a loss on that one. Hey, Matt, let's just see what we got here. First question is, shout out, SPY calls yesterday. Yes, finally. Again, the best thing about the SPY calls yesterday was patience. The best thing about my SPY calls yesterday was I knew my entry was damn good. If you don't know your entry is damn good, then you've got a problem with that trade because it could drop lower. What else we got here? Do I feel like the NASDAQ is going to hold direction up, or do you think it'll tank next week? I'm seeing down. Yeah, I mean, without knowing the CPI numbers and what the Fed's going to say, if I just had to guess next week, I would agree with Carl Icahn. The dude bought $5 billion worth of puts on the SPX. Do you think it was a hedge? It could have been a hedge, but it's more of a bet thinking CPI is coming in hot. I happen to think CPI is going to come in hot. I don't think the end of the world, the world's coming to an end. But I know prices are still fluctuating extremely high. I know rates are high. So again, yeah, if I had to make a bet, if CPI comes in hot, all tech will get hurt. What else do we got here? Hey, Matt, can we look at Tesla? We will do that soon. What else we got? Tesla, Grand Rising, Matt, talking Disney. Okay, yeah, let's talk about earnings that came in yesterday real quick, because that's why the SPY is up where it is. Again, a firm disappointed. Told you guys that buy now, pay later is bullshit. Apple's trying it out for a beta test. If it doesn't work for one company, it's not going to work for another company, Apple. All right, so what do we got? We got Win after hours up 5%. Robinhood. Now, this is crazy. Robinhood did what? 2 offerings in the past 2 years. So Robinhood's actually going to do a $500 million stock buyback. buyback. So the stock's up, what, 5% pre-market? I just so untrusting of Robinhood. It's unbelievable. MGM, which is related to Wynn, up 6%. You've got Disney up 5%. And remember, Disney was a great buy at the $84, $88 range. What is it this morning? Probably 117 bucks, 118 bucks pre-market. I've seen price targets on Disney at 122, 125, pretty damn close to that. Disney did lose money in their streaming service. They didn't add any real new numbers to the subscribers. Their theme parks did extremely well. But let's remember, before COVID, I used to tell everybody, Disney was a fourth quarter stock because their theme parks would do well. Their theme parks back in the day brought in 90% of their revenue. So it's great that they're going the streaming route as well, but it's the theme parks that bank the money. Yeah, it sounds risky. Google recovery calls. Again, Google and Microsoft, the calls have been going off the shelf. They're buying. So yeah, if today's going to be a green day, I'm just trying to see which one I'd rather be in. I know big money likes Microsoft better. I know Google just took an 8% dump yesterday, and Jim Cramer's like, oh, it's buying opportunity. This is the fact that he even mentioned Google. I would stay the hell away from Google. I mean, I'm just so anti Jim Cramer. He says up and like the sky will fall. That's just how it is right now. Someone's mentioning the U.S. dollar, Achilles tendencies. The U.S. dollar right now. Ooh, you're right. It did drop significantly. So here's the U.S. dollar. So yeah, if I'm going to give you my bull case scenario, I just revamped my bull case scenario right now. SPY is going to 418 today. It should see maybe some resistance around there. If not, the next level is going to be 420, 421. So yeah, I guess I might be siding more to being a bull for the last 2 days of this week. Again, CPI doesn't happen until next week. I think Apple should be dropping. Apple's finding support at 151, at 153. Anyway, so you were thinking the same thing as Josh. What do we got here? Another comment. Yeah, I had similar thoughts. Lucky I made that move. Okay, let's see. Did Apple gap up this morning? Let's see where Apple is. I don't even know where Apple is. I don't think Apple was moving all that much this morning unless I missed something. CAAI, 1.32%. Amazon's up 1.65%. Meta's up 1.65%. So no, it's moving in line. And actually, Google is lagging at only up 0.19% pre-market. It's off, 1% from everybody that's higher. Yeah, I might actually look to I don't want to give out a stock like Ford. God, it's just been such a tough one. The AI company, CAI or C3, which is symbols AI. Again, this one could pump on a bullish day or two for the last 2 days of this week above 30. So I'm just going to look at those options. I'm going to go out maybe to tomorrow, maybe call this my lottery play. Let's just see where those are put. So let's go to the calls. Let's see what the $29 calls, right? $28 calls. Okay, so the $28 calls on AI are 80 cents right now, 80 cents to $1. I could probably put in a bid at maybe like 75 cents on open or even 80 cents. Hopefully it trickles down. But if AI goes and breaks $30 and goes to $30 and like 50 cents, that would make these options worth $2.50. If I'm paying $80, that's a 200% return. So there's a lottery play. And here's how I came up with that lottery play, okay? Again, company is C3 AI, artificial intelligence company. That's all we're hearing about these days. I was in the same stock. It went up to $30 and like 60 cents the other day. Then it dropped to $24. Yesterday it was up 6%. It's probably up 2% pre-market. Here's the thing. If you give me green inflow days in that stock for the next 2 days, again, you're making an assumption. So Thursday's green, Friday's green. Why? Because CPI doesn't come out till next week. We've got some job numbers. Last week, they were atrocious. The market dropped and they bought it up. So I don't think the job numbers are going to be as atrocious. So then I say, okay, so if I get green and green with a little volume on either day, either Thursday or Friday, it's going to be back at the $30 range. If it's $30 range and I'm buying a $28 option, which is out of the money now, and I'm spending $80 per contract and it goes up to $30.50, I could get potentially $2.50. If I get $2.50 and I'm in for $80, then I'm tripling my money. If I triple my money, then I'm making over 200%. There's a lottery idea, okay? Even if there's some downside, I look at the next level down on those, and I'm thinking, okay, even if it moves a whole dollar, I'm only going to lose $25 per contract if I get in. So my limited risk might be something like 28 to 30% on the downside. On the upside, I'm looking at a potential 200 plus runner. So there you go. Ford doesn't move. Yeah, I was thinking about Ford. It actually does move for a small stock, but it moves very quickly, meaning it could gap up or down overnight, and then it could trade a very small range. But if I think today is going to be a green day for Ford and a green day for Ford tomorrow, and I can get in at $12.49, or even like $12.52, let's say it comes down a little this morning to $12.60 pre-market, I think I can get $12.80 or $12.90 out of it. Again, I would have to assume 2 straight green days in a row. So when you come out with a strategy, you need to have a complete strategy of why you think it's going to happen, what could potentially happen, what a good entry is. What I like to do for entry is I like to look at the previous day's chart and I say, okay, the low is here or the high is here. So if I'm looking for puts, I'm looking for it to retest the high. If I'm looking for calls, I'm looking for it to retest the low. I'm not just because the market's up pre-market going to say, I'm going to pay more this morning because I want in as soon as possible. No, I'm looking at where it closed at. I don't care if the stock's up 2 or 3% pre-market. I'm looking at what the options cost yesterday and the bid side. And if the bid side is $80, that's what I want to be on. If people are going to pay $1, $1.10, $1.20, then that option is not for me. I'm not overpaying on a contract. And sometimes I like to underbid because we know that there's choppiness when the market straight opens up. What does it do? Sometimes it drops down. You're like, holy shit. And then it spikes up. And then it drops down. So there's opportunity in that spike and drop to get into whatever you want. With that said, it is almost 9 o'clock. I'm heading over to Discord. More questions tomorrow. We can look at more questions on Discord. We can look at the flow charts. We can look at all these great things. Let me just show it off one last time. Let's just go here and let's look at what people were looking at right before me. Okay, hot options. What do we got here? Okay, SPY, Tesla, NVIDIA, Microsoft, Amazon, Google. Okay, those are the top ones. Premiums, there you go. So you're looking at the premium. Microsoft, $1.2 million premium there. What else is he looking at? So these are just great things to look at. Hot put contracts. What are we looking at? SPY, SPX, Microsoft, HYG, NVIDIA, Google, Best Buy. Not Best Buy, Bed Bath & Beyond. So that's just interesting. And what do we got higher here? So again, top flows. Okay, Uber, bearish. Let's remember, Uber was up 8% yesterday. Apple, bearish. When you look at the size, again, the positioning and the size, it's more of a bearish flow. So it wouldn't surprise me. Again, gave you your bull case scenario. Bull case scenario is US dollar drops. SPY goes up to 418 today. Bear case scenarios. Shit, we rejected this point yesterday around the same time. We rejected 415, 415.50, 415.83, 414.42, something like that. So between 414.50 and 416, I'm looking for rejection. When I see rejection, I'm thinking we're going to go down and we're going to revisit the 411 number. So again, if we go from 415 and that's close to the top and we lose 4 points, we go down to 411 and change, understand the return on my options are going to be somewhere in the 60, 70, 80% range, making me very happy. So again, me today, show patience. Number 2, slide into the positions gradually. 2 contracts at first. Oh, shit, I was right. It's going up. Oh, now it just dropped. I can get a better deal. Okay, I'm not going to chase on the way up, but when it drops under what I paid for it, like it did yesterday, I'll add another 6, another 8 contracts. Oh, I had a little FOMO. I bought 4 more contracts. That's how I ended up there. Instead of going 10, 20, 30, now you're in for 60 contracts and you're wrong and your account goes down. So it's small victories. Repeat the process and you'll be an excellent trader. Thank you for joining me. Please join me tomorrow, Friday, as our wrap-up, 8:30 tomorrow morning. See everybody on Discord.